Bitcoin. But it takes time. You know, it's like a child, right? So Bitcoin, you could argue that was a toddler, then it's an adolescent, then it has to grow into an adult. And so eventually, yes, I see it being the future. But, I'm probably one of the only people here that thinks price is going lower, before it goes higher.
We are going to get to your most recent price forecast, because every time I talk to you, there is a bit of an update, you know. Price moves very dramatically all the time. Now, Bitcoin and stocks, do you trade them differently? Do you use different technical indicators when looking at Bitcoin versus, let's say, the spider?
No, to be honest, pretty much the same stuff. You know, for the most part, when it comes to stocks, most of my money is in stocks still. And the reason I do that is because there's more opportunities for a swing trader, right? So a swing trader wants to be in and be out relatively quickly. With stocks, you have stocks that are going up on earnings, down on bad news. You get a lot more opportunities. With crypto, it's a little harder to find that because everything trades mostly along Bitcoin's lines, right? So if Bitcoin's down big on the day, it's very rare to find a cryptocurrency that's a big one that's going to be up in counter trend. So for the most part, I trade the same indicators, but it's just different amounts of money.
Now, Bitcoin does have a much different volatility profile versus, let's say, the S&P 500 or even tech stocks.
Yeah.
Bitcoin has very closely followed the NASDAQ, but just on a more leveraged level. So do you change the bands that you look at? Do you change the the moving averages that you use applied? I mean, the principles of technical analysis are still the same, but the specific indicators, do you change them for an asset with a different volatility profile?
You know, so I don't change them. I still use like the 200 is what Bitcoin just hit recently, and it pulled back beautifully off of it. That was around 48,250,
right.
And it pulled back. And I do use the 200 on stocks, but there's a difference, right? So you have to understand that cryptocurrencies have a much bigger volatility factor than most stocks. Like, even though market cap wise, you could say, okay, well, Bitcoin is an Apple or a Microsoft, or obviously a little bit smaller in market cap, but you don't see flushes overnight.
Right.
In Microsoft that dropped 20%. And you can see that in Bitcoin. So as a trader, I have to be fully aware of that and play it differently, slightly differently.
Yeah, so if I'm trading and I'm looking at historical precedents, let's say the S&P 500 sold off 6% today, I'd be like, Gareth, that's a huge buying opportunity. Maybe that's the beginning of a crash. But I would look at that and say, that's probably really dramatically oversold. Doesn't matter what the trend is, a 6% move in the SPY is not normal. Now, the same thing happened for Bitcoin. You probably wouldn't react the same way. And that's what I'm saying. Yeah. The indicators you look at for Bitcoin and something like the stock market, in theory, should be very different because you would react to percentage changes, the same percentage changes, you would react to them differently, right?
So the amazing thing about it is that when you're looking at a moving average, for instance, and I'll just use a moving average as a general, marker point, is that Bitcoin is going to mark the 200 and it's taking into account those volatile moves all the way along.
Right.
So a stock would not have that. So you actually have very similar things. And remember, charts are representations of human emotion, right? So when you have a buyer and a seller, they're creating upticks and downticks in a chart. So really when you're trading stocks, you're trading emotion. You're trading human emotion of greed and fear, which makes it almost perfect for us just recognizing, shutting everything else out, and then just looking at the charts. And again, I've gone on record with you in Dubai, right, when we were at 65,000, and I said this isn't a breakout. And the charts were telling me that, right? Everyone else said it was going to go to 100,000 in a month. And the same thing recently at 48,250, we hit major resistance. I recognize that. And again, that means Bitcoin is likely going to pull back. So it's really the same because you're trading human nature, right? So again, what makes you angry, right? What makes you angry probably makes the same other people angry. And you're going to react the same way, just like me.
Losing money makes me angry.
That's what it is, right? Which is why when things drop significantly, you see people starting to get angry, and then they end up selling more, and you see these kind of flash crashes in cryptocurrency.
Right. I like to talk to you about some of the trades that I've been making because I learned a lot from you. I actually, follow a lot of your swing trades because I talk to you and I get free advice, everybody. But if you sign up to a service, you get even better advice. That's a plug right there. But anyway, Gareth, I sold my position in Bitcoin about half my position about a month ago. Mm-hmm. Now, back then it was about $40,000 or so. So I've lost a bit of upside, but I'm still on cash. I'm in the sidelines. When do I get back in?
So there's going to be good support at 40,000 again. If you're a quick trader, you can jump in at 40,000 and play it maybe for like a $3,000 or $4,000 bounce. I would say this: what is your time horizon? What are you looking to do? Are you willing to be in and be out quickly, or are you looking to hold something for months?
Okay.
Sorry to turn the interview around on you. I'm not trying to.
Okay, so personally, I've got basically I've got 50% of my Bitcoin position I swing trade.
Okay.
So like you, I don't maybe it's trade as often, but whenever it goes down to a low, basically whenever you give me a floor, like at 30,000 or 32,000, I'll buy that, and I'll just hold it until it goes up maybe 10-50%, and I'll just sell it off. And then I'll repeat the process. So it's volatile enough for me to just buy relatively low and sell a little bit higher. I don't wait for it to go up 50%. I just wait for it to go up 15% or so.
Yeah.
Now, the other half, I literally don't touch.
You hodl.
Yeah, I hodl. I bought it some time ago, and I just don't touch it.
Okay. So what I would do is if you have that in cash and you're willing to swing trade it, start looking at 40,000 as a floor. If it breaks 40,000, you have some downside, but for the most part, I would expect support at 40,000 and a bounce back to about 44 to 45,000. So I think you can look for that. Now, just be ready. Remember, as a swing trader, you can't kind of just say, well, if it doesn't happen, I'm just going to ignore. You have to be ready to act. So that would be my level.
From 40,000, let's say I buy at 40,000, I'm waiting for 44,000, like you said. Now, what if I tell you, Gareth, 10% is not enough for me. I want a little more. Do I wait after 44? Like, how does this work?
Well, so it's going to 20,000.
I'm being greedy here because I'm trading crypto.
Well, and you can't be greedy in this scenario, and I'll tell you why. Is because ultimately the bear flag is in the chart. All right, you have a major cycle top here. You have all the makings of downside price action. The fact that we even fell off the 200 moving average and stayed within the channel that we talked about before tells you that everything on the bearish case for the midterm is intact. So again, if you're willing to be in and be out for 10%, then be ready to do that. If not, I would say sit on the sidelines. You'll get a much, much better entry when you break down and go 20 or sub 20,000.
All right, let's.
And by the way, you might want to. I mean, I know you're hodling some of it, but yeah, it's got 50% downside. So just. Now, by the way,
but the other half is just cash. Right? I'm waiting for it to go down to 20,000. This is my philosophy, and please tell me if you disagree with you think my approach is. I'm obviously not as experienced as you are. But the reason I hodl is because I realize I'm not a very good trader. I can't time tops and bottoms as well as somebody like you. And I don't want to take that risk. I don't want to pay, my expenses on my trades. And I don't want to just mistime the markets. And so if it goes down 50%, you know what? I'll buy more with my cash and then I'll make it up. Maybe I'll just, break even at the end of the day. If it doesn't, maybe you're wrong, or maybe I'm wrong.
I could be wrong.
And it goes up, at least I've got that position ready to take profits on. So that's the way I see it.
And honestly, that's a great way. And I think it's important for everyone watching to understand that if you're a long-term believer and not a swing trader, there's nothing wrong with dollar cost averaging in, right? I mean, if you pay here at 43,000 where we are now, and it goes down to 40, you could buy a little bit more if it goes to 35, and just continue to do so over the course of that period, since ultimately I do believe it's going to 100, 500,000 and even more down the road. And again, I think that's years away, but I do think it is heading there. So in that respect, if you're not willing to swing trade, I would just keep that in cash, keep it in kind of reserve, and then hold what you're hodling right now.
I've got more of a philosophical question for you. If you're bullish Bitcoin long term, $500,000 is a lot. That's 10x from here, at least.
Yeah.
Why don't you just hold it and don't touch it? I mean, why go through the I know you're a good trader and you've made a fortune trading and your subscribers have as well. But if you're that convicted in the long-term growth of an asset, why go through the hassle of timing tops and bottoms? Wouldn't you just feel more comfortable and secure if you just leave in there and maybe trade something else that maybe doesn't have long-term potential, but something volatile that has short-term potential?
Yeah, so the two things I hate the most is being down on a trade. So if I buy it, let's say 40 and it goes to 20, that's going to bug the hell out of me.
Yeah.
The second thing I hate is time, right? Okay. Time is money. So for me personally, because I'm a trader, because I know how to read the charts, I'm aware that it doesn't make sense for me to kind of just sit in something for, let's say, 2 years before I come back in the money and start seeing that move to 500,000, because I can trade in and out 10 million times, not 10 million times, but I can trade in and out multiple times and make up way more money in the near term. So for me, it's just my style, and I think each individual investor needs to decide what is their style. Do they know enough? Like you said, you're not a trader. You might follow me a little bit, but for the most part, I think hodling a little bit is fine.
Okay. So what's your price target now? I was going to ask you that. Yeah. 40,000 is a downside, 44 is the upside.
That's near term. That's just very near term bounces.
Medium term then.
Medium term is 20 or sub 20,000 still.
Okay, you're still
and I've been consistent. I think in Dubai is when I first unveiled that price target to you. And I stick with it because the charts haven't changed. Now, I do want to be clear, the charts can change, right? Yeah. I have to be someone who can admit when things change. So far they haven't, but I will absolutely come back on with you and be like, all right, they've changed.
how would they have changed? What would you look at that would tell you that they've changed?
So we basically, from the November high, you have this vertical kind of drop all the way down. And then since I think it's been the last 2 to 3 months, since January, we've been chopping sideways to slightly up. And if you connect the highs and the lows, they form this perfectly parallel kind of channel. As long as price is inside of that, it's classified as a bear flag, and the expectation is that it would break lower. All right, so now if we get above that channel and establish ourselves above that channel, that would be where I would start to say, okay, are things changing here? Now, maybe they don't, but I have to at least ask myself that question.
Okay, Gareth, so you're walking around the Bitcoin Miami conference, a lot of bulls here. Have you told anybody about your sub $20,000 price target?
I think many know already. I've seen them walking widely around me. They don't want to talk to me. I think I think I'm like the devil's curse over here. But listen, again, I think that remember.
I will say, and I'll let you speak. I will say that I've had a number of people come up to me personally and say, I've watched your Gareth Soloway interviews. Is he still bearish? Does he still think 20K is going to happen?
Just follow my Twitter.
I said, look, I don't make the price targets. I just go ask Gareth. He's coming on tomorrow. But yeah.
That's it. And I think it's important to remember, again, folks, is that midterm is like 3 to 6 months out there. If you look at past Bitcoin cycles, it tends to bottom between 12 and 18 months since the previous high. So you're talking November to maybe early 2023.
Right.
But I think it's important to recognize that if you map this out to the .coms and Amazon hit a high of 112 in 2000 and a $6 when the .coms busted. Where is it now? You know, 3,300, 3,400. So $6 to $3,400. That's in 20 years. I mean, think about what Bitcoin would do. Let's say Bitcoin bottoms out at even $10,000. Then multiply that out where Bitcoin could be if it follows the same thing.
I want to go back to your band of 40,000 to 44,000. Now, it seems that every time I talk to you, the trading range gets a little bit more narrow. Why is that?
So that's a great question. And basically what I'm doing is that every time you have these so we're in this range, right? It's kind of an upsloping channel here. Yeah. And as you jump up, you're kind of going a little bit here, then you're jumping up. And what it's doing is it's creating little pivot points, little areas where it kind of pulled back to and then jumped. Those create new support areas for us. So the band is the band. That's like the major level. So the 48,000-ish level to about, I think it's around 36 or 37. Those are the major bands. Inside of a band, you get lots of trading opportunities. Otherwise, I wouldn't have done any trades if it wasn't. I've done a bunch of trades since January if there were no trades inside of that. Okay. But my job is to get people opportunities, both long and short, and I've been able to do that with pivot points.
Okay. All right. Well, besides Bitcoin, what other cryptos are you following right now?
So I think Ethereum is worth watching. I mean, there's a major trend line if you connect all the lows going back about a year or so. As long as it stays above that, it's safe. I do worry about Ethereum breaking that line, but I don't think people need to be concerned until it happens. Solana is one that's interesting. It had a big pop recently. It's pulling back. I do have a buy level on it. I can't recall what level that is, but I will definitely mark that for our next interview.
Next interview. Why can't you spill the beans this interview, Gareth?
Because this is the one time where I don't have my charts with me. I feel naked. I'm
green screen this.
Yeah.
All right, fair enough. Now, Ethereum, what's your long-term vision for Ethereum? Is it going to surpass Bitcoin in market cap? Is the flipping going to happen, you think?
So my biggest concern with Ethereum is that it could be jostled out of the top lead by another cryptocurrency. I think Bitcoin remains the biggest, and it will be for some time because it's becoming the digital gold, right?
Yeah.
So you're seeing, the likes of Michael Saylor, you're seeing the likes of so many big players getting in and basically saying this. While Ethereum has a huge amount of use case, what's to make Solana not take over? What's to make, Avalanche? Or is there one that we don't even know of yet that could take over? And that means that when I'm investing in it, I'm going to do slightly less money in Ethereum when I go long because of that risk.
Okay. Outside of the crypto sphere, let's talk about monetary policy a little bit. The Federal Reserve, we spoke about this many times, but since last we spoke, they've raised their interest rates one time. They're projecting a few more rate hikes down the line. I know your view on rate hikes, but I just want to ask you, for the people who haven't seen this, first of all, how many rate hikes do you think realistically can happen? And second, what is it going to do to the crypto markets? Because I've seen or heard of both sides of this debate. One, that interest rate hikes will really limit capital flows into risk assets like cryptos. And the other side of the coin, no impact because Bitcoin trades independently of macro forces. It's its own entity.
So right now, it's definitely a risk asset. So there's no doubt about it when you're seeing liquidity get tightened by Fed rate hikes, when you're seeing runoff on the balance sheet. Now they just announced $95 billion runoff. All of that is going to cause tightening within money flow into crypto as well as tech stocks and then markets in general. So you have to think that Bitcoin's going to take a hit. That's part of my thesis for why we're going to go lower. Now, you know that I've said that I don't believe the Fed will hike as much as they say they're going to, because the economy's already starting to suffer. I mean, we have this nice reopening right now in the U.S. where lots of people want to travel and get out. But when you talk about, they just took away QE, right? Now they're raising rates. Now they're cutting back on their balance sheet. These are all tightening measures. So it's not that they're just tightening 25 or 50 basis points. They're really tightening more than that because they're removing excess money from the system, right? And that's going to be hurtful to the economy. I think by, again, probably the fourth quarter of 2022, you'll hear people starting talking recession. And in fact, I think Morgan Stanley might have just recently come out and said something about maybe a recession is on the horizon. But I've been saying that, and it's going to happen. I mean, there's no way you can take the drugs away from the market that it's been addicted to for now